All right, good morning. Today is January 22nd, 2025, and I am back with another edition of the Wednesday live show, and it feels like sort of a whole new world because obviously we have a new administration, and that's going to be quite interesting because, as you recall last time, there was a lot of excitement when Trump was president because you never knew what kind of news was going to hit the tape at any given moment. And as I mentioned last week, it became pretty apparent during the last Trump administration that he took the stock market as the number one gauge for how the country was actually doing. So he was hyper focused on the stock market. And as we speak, a couple of days into the new administration here, go right to the chart. The S&P 500 is literally within spitting distance of the all-time high here. I mean, it's so close that basically, well, hang on. Let me just put this right here. Excuse me. Well, it looks like we got a little way to go here. This all-time high in the S&P 500, it looks like, wow, 60, 99, 97. Call it 6100. Yeah, that looks like it right there. See it? That was on December 6th of last year. Yeah, so it's going to take 6100 on the S&P to actually hit the all-time high. Well, that's kind of interesting. Notice these gaps on the chart here. I mean, we've just sort of gapped up. There's a gap here last week and another gap, and then of course today. Hey, I'm a little torn on this because in theory I would have preferred to see a slower move back to the highs without these gaps here. But notice I mentioned this a couple of weeks ago, last week, whatever, to sort of pay attention to this MACD cross, which was happening below the zero line. So that's kind of interesting. Obviously, it crossed. I'm not a big fan of keeping crosshairs on my chart. They're kind of annoying, but so I'm going to say it crossed, on the 17th, just a couple days ago. So let's see. Well, Monday was a holiday, so this would have been Friday. Yeah. Yeah, Monday was interesting. The whole inauguration thing was quite interesting. And there's been a lot that's happened since then. There's an old saying about well, I don't know what the old saying is. I can't think of it off the top of my head, but basically a lot has happened in the past couple of days. So S&P within shouting distance, spitting distance of the all-time high here. I have to think though that these gaps are going to get filled. At least these last couple. But notice that last time I was on, which I guess was just last week here, I drew the channel and talked about the MACD cross, and here we are. So it was kind of interesting because this rally prior to the inauguration. So there was the inauguration right there, that little doji bar right above the top of the channel. But prior to that, market was looking at quite a bit of resistance. I even talked about that. And so when the market gaps, just basically charges straight higher like this and sort of blows through the resistance, I think it's probably what you would call, well, it's not really a high yet, but the structure below, I guess there was not a whole lot of volume. One of these days I'm going to set up a chart with volume at price. But anyway, my guess is that the volume's pretty thin the last, 4 or so sessions. And so, hey, we may poke an all-time high, this and that, but I get the feeling that we're going to come back down and retest it, especially today's gap. So one thing that's pretty interesting here, well, let me look at SPY first real quick, because the SPY has a little bit different of a look. As far as the SPY goes, it's basically it's like right at the high now. And that's, of course, it's got a little bit different character. The SPY actually shows the gaps a little bit better than the S&P. I've talked about that at length in the past, that the SPY reflects the open better than the index. But look at these gaps. This one here is pretty significant. But it is what it is. So if I'm not mistaken, the NASDAQ, yeah, the NASDAQ's got a little bit further to go, although the semiconductors are rocking, right? So there's all these new initiatives and all these new initiatives around AI, data centers, and so the chips. Well, let's see, Netflix. We might as well talk about Netflix real quick here. Yeah, Netflix, look at that, $1,000 a share. Pretty incredible, pretty incredible. They released earnings, and it's interesting to see that very unusual price bar yesterday, and then this gap this morning. So that's kind of crazy. But some of these chip stocks, ARM up 15% today. Micron is another one that's that people have been talking about. Huh, that's interesting. Interesting. This is one to maybe keep an eye on. What am I looking for here? There we go. There's a heck of a horizontal level there that Micron needs to get through, but that's kind of interesting. I don't need to save that. It's a pretty big basing pattern there. There's the 200-day moving average. Yeah, there's a level to get through there, but I've been seeing some comments to keep an eye on Micron. Nvidia, of course. Nvidia's, there's the earnings release right there, and so it's kind of coming back up. I mean, it's up 4% today. So we know that this has a huge impact on the indexes. So let's just look at the semiconductors in aggregate here. Huh, interesting pattern. That's pretty interesting. A lot of bounces along that 200-day moving average. Huge rally in the past, week and a half or so. Kind of broken out of this sideways structure. So this looks like it's a very steep move, but look back here. You had sort of a sell-off, and then you had a really steep move, a little give back, but you ended up with, I think the semiconductors are going to be one of the most important things to keep an eye on going forward here. I want to look at Intel because, Intel, wow, look at that. It's amazing to me because Intel, well, at least back in the 90s, you're right, back in the dot-com days, I mean, Intel was the NVIDIA of the semiconductors. It was the leader, the innovator, the number one, and it's just interesting to see it. I remember when it got added to the Dow. Some of you may recall they added Microsoft and Intel to the Dow at the exact same time during the dot-com mania. It's interesting to see how Intel's sort of fallen out of favor. AMD has had, I guess I should go to a weekly. I should be looking at some weekly charts on this. Yeah, AMD is in the midst of a significant pullback here, and of course, there's I don't pretend to have a lot of insight into the individual fundamentals of all these various semiconductors, so like a lot of other people do, but All I can tell you is that AMD is in the midst of one of these pullbacks similar to the one in 2022, right? And this will be one to keep an eye on for when it turns the corner, so to speak. And that, it may have a ways to go. If I cut this section out and overlaid it here, you're probably around this spot here. So it's a straight sell down over, over the last 20 weeks or so. Basically since the beginning of October, it's a straight sell down. So maybe it's due for a bounce here. And whether that bounce is, whether this marks the bottom here, this is the 200-week moving average, I guess, since, 200-week simple moving average. Interesting how it bounced off of that. It's funny, everybody talks about the 200-day moving average, but the 200-week moving average is interesting. Keep an eye on that MACD there. You can see it's still got a ways to go, but yeah, so this is one that probably has a lot of potential going forward. I mean, it's been a darling since October 2022. I mean, that was a huge move up there. But anyway, let's go back to NVIDIA because I just wanted to look at the weekly chart of this. Yeah, if you look at the weekly chart of NVIDIA, you can see that it's like, and remember, this thing split 10 for 1 not that long ago. So that's kind of interesting. Right up here near the highs. Back to the daily charts. I wanted to look at the price of oil. Geez, pop-up messages. I want to look at the price of oil because going back to what I was saying there, well, hang on, let me go to the weekly chart. Drill, drill, drill. I believe I heard Trump say in his inauguration speech, right? So that's kind of interesting. Remember, I was talking last week. I was a little concerned about. Well, last week was all about inflation because the inflation numbers come out, and so theoretically and ideally, what we want to see is we want to see the price of oil stay under this 200-week moving average. We want to see it, between 70 and 80. Trump did say that he's going to refill the Strategic Petroleum Reserve, which is interesting because I believe that's 400 million barrels of oil. And so anyway, the energy sector is going to be one to keep an eye on. What am I wanting to look at here? ExxonMobil. Interesting. The problem with a lot of these energy stocks is that they're creepers, as I say. This could potentially be a great stock or whatever, but if it goes from 110 to the all-time high, it's not all that exciting. Now I suppose over somebody holding this over years and years and years, I mean, you did okay, but these energy stocks tend not to be extremely exciting. So, what is it? Take a look at IEO here. Here's the. It's interesting. This iShares oil and gas exploration production. This is probably most representative of the sector, and it looks almost identical to ExxonMobil. And as I was just saying, even if this thing works its way to new all-time highs, it's not all that exciting. I mean, that's from 100 to 110. That's 10%, I suppose. But yeah, it's not nearly as exciting as the chips. Speaking of which, this SOXL, this thing is extremely volatile. This kind of shows, the semiconductors themselves are up near highs, but you throw in triple leveraged on a daily basis, and you can see that, you can see how far it is down from the highs. Of course, it's up 10% today, and that's kind of interesting, but I honestly think a lot of these leveraged ETFs have just kind of ruined the market, to be honest with you. I'm not a fan at all of, well, I mean, I suppose certain sectors it's okay to have 2 and 3 times leveraged ETFs like for indexes and that. But where I draw the line is now they have like, double short Tesla and, double long and triple long individual stocks and ETFs and all this stuff, and so then it just turns into it's too much. I don't think that the SEC should have approved a lot of what I would call these garbage ETFs, especially leveraged ETFs. Yeah, Microsoft. There's a weekly chart of Microsoft. I've kind of favored this stock for quite some time here, as it's sort of, well, back over here, back in the fall, it's had a lot of zigs and zags. I was kind of keen on this stock back here, and it rallied up. Actually, I believe I was looking for it to break out, so I don't have my actual list up over on the side here where I have the markups. I probably should break that out because quite honestly, all the marks on my chart. There we go. The problem is, yeah, there we go. I mean, there's the weekly, there's the daily. At least it has my marks. Yeah, I was kind of looking. So, a little bit of a breakout there, but that was a huge run, and then it gave most of it back, and now it's on a run again. But the weekly chart actually looks pretty good. Weekly chart's got a good look to it. Quite frankly, it seems like it makes sense at this point to expand this triangle, right? Just for the fun of it, I'll draw it over the bodies of these candles. Draw it down across there. There we go. Close it, save it. Yeah, Microsoft's got a pretty good look to it. This is a real nice big consolidation here, so be watching for a breakout of that and a move back to the highs. Quite frankly, stop loss under last week. Microsoft's more of a buy and hold stock. So we'll look at this Palantir because this thing has been nuts. Look at that perfect pivot low on this particular stock. Now, is it overvalued? I've seen a lot of talk on this, and if you look at like the price to sales and price to earnings and all that, I mean, this thing is in the stratosphere. And as I've been saying for a while, the entire market is extremely overvalued by any historical measure, right? The Buffett indicator, price to sales, price to earn. I mean, literally, I've seen graphs out there. Goldman Sachs has like some sort of graph that has historical valuation metrics, like 20 of them, and the overall market by any means is overvalued given any historical metric. So it's kind of running on. I have this theory. I haven't talked about this a whole lot, but I've been thinking about it. Is that with the U.S. dollar so strong compared to all the other currencies out there, and of course that's no big mystery. And of course, it's no big mystery that emerging markets have been extremely weak and that the dollar in the U.S. market is like king of the world. And so my theory is that all the people and institutions in all these other countries out there are buying U.S. stocks. I mean, that's what's going on. And that's sort of a driver of the market. There we go. There's a chart I was looking for. Look at this. We're going to hit an all-time high today, and I can guarantee you that if and when the stock market hits an all-time high, even if it just touches it intraday, the next time Trump speaks, he's gonna mention it because that's his MO there. So, and that makes me a little bit nervous too because there's a lot of people that don't like him and want to see, would love to see him fail in some way, and so I'm just hoping that the powers that be don't pull the rug on this market. It's kind of a tough time to use the stock market as your number one gauge for how the country's doing at a time when it's the most overvalued in history. That's just a scary thought, but hey, the market can, as the old saying goes, the market can remain irrational longer than you can stay solvent. And so, is the market irrational? Well, it depends. Based on historical valuations, it's a little bit irrational. Let's look at this treasury yield. I saw a graph today. I should have saved it, and it had about 10 different things that theoretically affect the market, and the number one thing that was correlated as far as having an effect on the market was the 10-year Treasury yield, right? So this is a weekly chart, and so I mean, here's the thing: if theoretically when yields go up, that's bad for the market, and so in the very short term here, we can see that we had a little bit of a sell down. Let's look at the daily chart of this. Yeah, we've had a little bit of a sell down here, and that is catalyst for the recent rise in the market. But I mean, overall, as you saw from the weekly chart there, geez, as you saw from the weekly chart, interest rates have been going up, and so if for whatever reason interest rates break out to a high here, then that could be a problem for the market. So, real quick, let's look at Apple here. Apple is, well, Apple's coming out with earnings. Let's see, on 1/30, so that'd be next week. This is a weekly chart. And you can see that Apple's kind of in a crazy sort of a sell down right now, which is interesting. It's all the way back to levels it was. I mean, it's all the way back to levels it was like last spring. So that's sort of interesting. Take a look at the daily chart here, just for the fun of it. Yeah, that's that's a pretty significant sell down. Oh, and I need to mention tariffs while we're at it. So you remember the last Trump administration, tariffs were a big thing. He would threaten tariffs, talk about tariffs, and then I mean tariffs happened, but now he's talking about them, and so that is one of the things that it's sort of a wild card. And I've always believed that they use the news cycle to sort of manipulate the market in a way. I won't say manipulate it so much as affect the market, right? So if and when the market starts selling off, you're going to see news coming out from the administration that is an attempt to stabilize and or rally the market, right? And so there's kind of a fine line there. But anyway, Apple's, quite honestly, this sell down right here. Look at the RSI here. RSI is getting down towards the oversold, right down around 30 there. You got the 200 week moving average is right there. It's interesting to, oops, I didn't mean to do that. Look at that gap up on earnings right to the 200 week moving average way back here last May. Anyway, so this is the kind of sell down that you want to see. And so at some point in the future, I mean, it's kind of a crapshoot ahead of earnings, but earnings is going to be next week, so I'd look for some sort of bottoming and then a potential reversal on earnings, or maybe the earnings come out and you get one of those final sort of long range down moves and then a reversal. So yeah, Apple's actually it's setting up. This is an ideal setup for Apple because it's pulled back significantly. So I'll be keeping a close eye on that. So AMD, Apple, Microsoft. Let's look at ARC real quick. Um, ARC is this is the weekly chart here. Yeah, I spent a lot of time looking at this last year to sort of figure out, what the overall tone of the market was, because this is sort of my proxy for animal spirits and small caps and momentum growth stocks. Interestingly enough, right about when was this? It broke out of this. This was November. It hasn't been that long. So I should extend this box over to right here. Like the week of November 4th was this big long range sort of week higher, right exactly to the top of this box. It couldn't have been more perfect. Then the following week, the week I guess of 11/11, it gapped up, it broke out of the box, and so now it's actually forming a nice little consolidation here in this area. Just draw that right there. And so, yeah, this is actually kind of interesting, to be honest with you. So I'm going to save this, and we will watch this little box going forward, see how it breaks out. But I mean, as far as a bottoming pattern goes, boy, that is, it's scary, but it's also just textbook. And the fact that you're talking a couple of years here of this bottoming, and then finally starting to work its way out. And of course, there's a lot of resistance, if you go way back here, but I see a lot of potential here, especially if there's a rotation back into sort of small cap stocks, and of course everything, in speculative high growth stocks and that. But as we know, it's no mystery that that the market has been really top heavy, and last year, the market was up 20, S&P was up 23%. It was just top heavy with the Mag 7 stocks, and there's potential, I suppose, for money to come into and rotate into these type of stocks, right? Last chart we're going to look at IWM here on a weekly chart, and let's take this way back. IWM's got a fairly decent looking little pattern here, right? I mean for the whole year of 2024, it was a series of higher lows, right? And on a weekly chart, and I mean going back to this low here in October 2023, it's basically been higher lows and continues to be higher lows. And so it's still sort of struggling with the highs back here, and it's still below this high in 2021, but poked above it. But this is a pretty positive sign, I suppose. I guess the caveat is that the market has already gone up a lot. It's overvalued by any historical metric. But the small caps have been unloved and underperformed pretty much so. Especially even last year. I mean, the IWM was up, but it wasn't all that exciting. So, and the majority of stocks underperformed the index, which was kind of interesting. So we'll just have to see what happens. But anyway, hey, thanks for tuning in. I like to keep these at about 30 minutes. Let's go back real quick. I'll end this with a chart of the S&P poking at the all-time high in the history of the world. So thanks for tuning in. I'll see you back same time, same place next week, and we'll see where everything stands then.